Dear students of class 9 Business Studies English Medium Morning Shift, this is Mohammad Majidul Haq Khan. How are you? I hope that all of you are well. Today I would like to discuss about the banking business and types, chapter 9, Finance and Banking. From this chapter you will be able to learn about the objectives of bank, principles of banking business, and classification of bank. Before discussing objectives of bank, you have to learn or know about what is bank. Banks are financial institutions that accept deposits from their customers or clients, then use those deposits to make loans for individuals and business. In addition to these activities, banks offer wide variety of financial services, including issuing letter of credit, bank draft, pre-order, providing ATM card, there is debit card and credit card. Objectives of bank differ from one another due to the difference of groups involved with banking. Objectives of bank can be classified into three categories. Objectives from the owners and managing authorities' perspective, objectives from the government and state's perspective, and objectives from the client's perspective. Objectives from the owners and managing authorities' perspective: investment of fund and earning profit. Making proper investment of the money collected from savings is one of the main objectives of bank. Since we know bank deals with other people's money, bank collects deposits from the people through opening different types of bank account at lower rate of interest and gives loan from that deposited money at high rate of interest. To achieve these objectives, owners of the bank have to earn anticipated or predetermined rate of profit. Every investment has an opportunity cost. At least this amount of profit should be earned. That means, in this case, whatever the money the owners have invested in forming bank, if they invest that money in elsewhere, then whatever the rate of return they could earn from that investment, this is the opportunity cost of the owners of the bank. So, at least this amount of rate should be earned. Otherwise, the bank's objective remains unachieved. Achieving goodwill. To earn goodwill is the another objectives of bank from the perspective of the owners and the managing authorities. The goodwill can be achieved through providing better services or efficient services. If the goodwill is achieved, then the image of the owners is protected. Next, participation in development. By investing in different sectors, bank participate in the development of production and national income of the country. In this way, the owners of the bank become successful in their investment. Basically, bank invest their money in the different lucrative sector for earning profit. Besides that, they also invest their money in the development program of the country, which increases gross domestic production and national income of the country. Next, social contribution. Spending a certain portion of profit in social development and social activities is the another objectives of bank from the owners and managing authorities perspective. You know that Das Bangla Bank is providing education stipend to the poor meritorious students as a part of their corporate social responsibility. Not only Das Bangla Bank, different types of bank are contributing to the social development program as a part of their corporate social responsibility, because it ensures the sustainable development of banking business. Next, objectives from the government and state's perspective. Circulation of notes and currency. The central bank enjoys exclusive right of issuing notes and currency. In Bangladesh Bank issues currencies as the central bank of Bangladesh. Bank checks can be used as a medium of exchange and alternative to currency, which helps the government's job of currency circulation. That is, bank check can be used as an alternative to currency and notes. Capital formation. Another important objectives of banking business from the perspective of government and states. To form capital, bank collects scattered savings from the people through opening different types of bank account, and this scattered savings is turned into capital. In this regard, bank motivates the people for saving and forming capital. Next, investment and industrialization. Investment is the precondition of industrialization. Without investment, it is not possible to ensure industrialization. Before sanctioning any loan, a bank analyzes the prospect of business of the project. The government keeps on presenting priority sectors to to the people and the nation. Bank participate with the government in achieving the objectives through sanctioning loan on priority basis. Next, controlling money market. Here money market means the market where short-term securities are bought and sold, or the market where transaction of money occurs as loan for a short period of time is called money market. Both the government and the central bank always control money market in order to control inflation. Here inflation, what is inflation? Inflation is the rate at which the cost of goods and services rises over time. It could also be thought of as a reduction in the value of currency, because consumers are now able to purchase less than they previously could with the same amount of money. Say for example, if the inflation rate is 6%, that means on average something that cost taka 100 this year would cost taka 106 next year. However, the central bank alone cannot control the inflation. Commercial banks extend their full cooperation to the government and the central bank. Next, employment generation. Eradication of unemployment problem is one of the objectives of banking sector. The project in which bank finance can create employment, for example, by making investment in a labor intensive project instead of capital intensive project, a bank can create employment and thus can help the government. Here, labor incentive and capital intensive. Labor intensive refers to a process or industry that requires a large number of labor to produce its goods and services. That is textile sectors, food services sectors, agriculture sectors, mining sector, hospitality sector is labor intensive sectors. Whereas capital intensive refers to business process or industries that requires large amount of investment to produce a goods or service and thus have a high percentage of fixed assets such as property, plant and equipment. So in this case, bank always tries to invest their money in the labor intensive sector. That means the sector where large number of laborers are required to produce goods and services. Next, objectives from the client's perspective. Deposits. Since you know bank deals with other people's money, basically bank collects deposits from the people through opening different types of bank account. Basically bank offers three types of bank account: savings account, current account and fixed account. In current account, no interest is given to the clients, whereas moderate rate of interest is given in against of savings account. And current and savings account is called on-demand deposit account. That means in this case the bank is to pay client's money on demand. And fixed deposit account, that is the account which is opened for a specific period of time and money cannot be withdrawn before the end of that maturity period. And in this case, interest rate is comparatively higher than that of the other types of bank account. Fixed deposit account normally open for 1 month or 3 months or 1 year. That is, it is started from 1 month. Next, security. Giving security to the client's valuables is another objective of bank from the client's perspective, because in our society keeping these valuable assets at home is not secured, and in this case bank gives protection or gives security to the client's valuable assets. Next, advisor and consultant. Bank also works as an advisor and consultant on behalf of client. Before sanctioning the loan, a bank evaluates the business prospect of the project. Profitability of the business is as important for the loan applicant as it is for the bank. Professional efficiency of the bank strengthens to the client in measuring profitability of the business. A bank sometimes acts as an advisor when any expansion or modernization is required for the business. And in this case, bank provides consultancy services to the clients, because bank appoints efficient officer in these respects. As a result, it is possible to provide consultancy services to the clients in terms of expansion and modernization of business. Next, representative and trustee. Bank also works as representative and trustee on behalf of the client. Trustee is one who looks after or take care of the valuable assets of the alive or dead person in exchange of certain commission through trust deed. And in this case, the bank takes the full responsibility of the clients to manage their property or valuable assets in exchange of certain fee or commission. Next, money transfer. Bank transfer money from one place to another within and outside the country according to the client's requirements. Next, development of standard of living. Banks introduces various new and innovative products and services to improve the people's standard of living. In this case, banks provide ATM card, there is debit card, credit card, and also provides online banking services. And nowadays, banking activities are going on in every big city all over the country. And 24 hours banking services are providing by a bank. Without having or carrying cash money, a client can easily make transaction. which improve their standard of living. And besides that, bank also provides mobile banking, internet banking, which makes their standard of living increases. These are the objectives of bank from the three perspective. From this topic, basically 1 or 2 marks question is important. Say for example, how does bank create employment opportunity, or how does bank improve the standard of living of people, or what is money market, how does bank control money market. These are the important questions for 1 and 2 marks questions. Besides these, MCQ question is also important from this chapter. Next, principles of banking business. Principles of banking business. Principle works as guideline for running the banking business. As banking is a risky business, risk cannot be avoided without establishing a dependable and efficient management system. Every bank should follow some fundamental principles to avoid the risks which arises in using others' money in banking, which are stated below. Number 1, principle of security. An important principle in banking business is to ensure the security of clients' money. As you know, bank always deals with others people's money. In this case, whatever the deposits are collected by the bank, basically bank invests that deposited money in order to earn profit. And in this case, before sanctioning loan, a bank should evaluate the financial solvency, honesty, and keep security against the loan. That is, bank should give more importance in terms of security. That is, before sanctioning loan, bank always should take security from the borrower or clients. Next, principle of profitability. Earning sufficient amount of profit is another principle of bank. Bank collects deposits from the people at lower rate of interest and gives loan from the deposited money at the higher rate of interest. The difference between these two is the profit of bank. Next, liquidity principle. In banking, liquidity is the ability to pay clients money on demand. So deposits are the lifeblood of the banking business. Investors are repayable on interest or after expiry of a certain period. Everyday investors either store or withdraw money. To fulfill the demand for cash, banks need to keep certain amount of money in their custody. Basically, in this case, bank is to maintain a certain portion of their deposited money in cash or cash equivalents so that they can honor the check of the client, because client can withdraw or take their money at any time from their bank. Next, financial solvency. Solvency means financial capability or sufficiency in the capital. To stay in this competitive market, banks must have sufficient capital. If the funds are not sufficient, the bank cannot run his business. So bank should have financially sound and maintain a needed capital for continuing the business. Because of lacking this principle, or due to the lack of financial solvency, a bank may become bankrupt. Next, principle of efficiency. Success of business mostly depends on the efficiency of the board of directors, officers, and staffs involved in the management. Efficiency, what is efficiency? Efficiency is the ability to avoid wasting materials, energy, efforts, money, and time in doing something or producing a desired result. So in this competitive market, there is no alternative way without efficiency in management. So bank must train their employees to increase the efficiency in management. Principle of providing services. The bank ensure the best services to their customers or clients. The success of bank depends on the services provided by the bank. The client chooses those banks that provide improved services. So bank believes that clients' services ought to be done efficiently, effectively, and instantly. Then principle of publicity. It is a period of exposure and advertisement. Expansion of business is possible by adopting attractive, understandable, and suitable advertisement and publicity. Basically, through publicity, a bank can exhibit, represent different ways of banking services to the clients. So it is the way to represent the banking services to the clients. Next, principle of secrecy. Clients wants to keep secrets about their valuable assets and money. So bank must have to keep secrets about their clients' accounts. If a bank does not maintain secrecy, the client will be dissatisfied. Principle of goodwill. Creation of goodwill through efficiency, secrecy, and to provide better services is also important for the bank. Next, principle of investment. Bank invest in the sectors which can influence the development of the economy and fulfill clients' needs. So investment principle includes the size of the invested capital, sectors of investment, installment policy, and the duration of the investment, interest rate. And in this case, bank should follow period mix, that is, money should not be granted as loan for same period. That is, period mix means loan should be granted for different periods. The combination of all these are the principles of investment. Profitability and goodwill depends on this principle. Next, principle of development. All activities of the bank target economic development and banking development. That is, bank should follow the principle of development. According to this principle, bank should invest their money or to run their banking business in such a way so that it can ensure the overall economic development of a country. Next, principle of objectives. Economic, social development and profit earning by investing in prospective projects and rejecting the unproductive and uncertain projects are the principle of achieving objectives. That means in this case, bank should always give more emphasis in terms of sanctioning loan basically for productive sector. That is, productive sector should be given more emphasis and unproductive sector should not be given emphasis. Next, principle of economy. What is economy? Economy means to run any activity at low cost. There is maximum work at least cost. Is one of the important principles of banking business. Proper utilization of fund through cost minimization is another principle of bank. Low cost and high profit is an important principle of bank. That is, in this case, profit maximization is achieved through cost minimization. And bank should follow economy at every sphere of running the banking business. Otherwise, it is not possible to maximize profit. Next, principle of trust. A precondition of bank business is clients' trust on bank. As we know, the bank always deals with others people's money. That's why bank should give more emphasis to clients. That is, they have to earn the clients' trust or faith. Banks maintain secrecy provide locker services, pay back deposited money, act as advisor. All these activities are the identity of bank trustworthiness. Next, principle of cautiousness. Bank collects lots of information to avoid falling in losses as it does business with borrowed money. According to this principle, banks have to be careful in running the banking business, as bank deals with others people's money or borrowed money. Next, principle of specialization. Specialization means dividing the job of banking business into different segments, because we also live in the age of specialization as well as super specialization. Therefore, banks segment their entire functions into smaller units and place their employed or employees according to their efficiencies. That means, according to this principle, the total activities of bank is divided into various small groups, and after that employees should be appointed in the various units according to their efficiency. As a result, efficiency is enhanced, because whenever any employee do their job year after year, then it is possible for them to perform the job efficiently and effectively. And in this case, bank divides the activities. Say, for example, foreign trade department, loan sanction department, note issue department, or LC opening department, bank account opening department. That's all about the principle of banking business. Principle of banking business is very important for creative questions, basically question C and D, and you have to give more emphasis on principle of banking question for creative questions from this chapter. Okay, that's all about the principle of banking business and objectives of bank. All the best to all of you. Stay home, stay safe. Thank you very much.